even the S&P, that frankly was a $1,000 trade, just on the simple concept, approximately $1,000 trade, just simply on the concept of the Wyckoff principle of springs, and discussed this in the live chat room today. And I drew the lines of support, and I'll show you the simplicity and the brilliance really of Wyckoff in trading, and with very nominal risk and a clear objective to the markets. And I can tell you and show you approximately what the rest of the day could be like. So this is today's action on Monday, February 6th. This happens to be a 15 minutes E-mini S&P. So as we look at the market, we have Europe section here. You can see the times on the bottom. And Europe shows a negative bias or a bearish bias to the downside. We do have our first reaction from this level at about 4:45 Chicago time. One would expect a retest. We get a retest here before the market opens in Chicago. We're going to draw that line as our ICE support. We're going to draw it like a football field all the way across. Boom. Okay. So from this reaction, we get some short covering, not demand. It's also an overnight, but we get a couple of high-end closes of short covering. We then draw our line from the reactionary high from a markdown high that came across. We draw that line simple across to the market. This will form our trading range. The reaction to mark down, and the market that reacted back up. We have a shortening of the upward thrust. We're going to label it as SOT, the shortening of the upward thrust. And we want to see the reaction from there. You can see right now that the market here has some type of reverse absorption. My term, not a Wyckoff term, but I want to describe the negativity or lack of demand. We have a reverse absorption, and that's noted by the low-end closes of this market. The low-end closes of the market. These are the reverse absorption lines. This will give us a market that comes down here, and the market then, I'm going to put the reverse absorption here. So the reverse absorption is actually these two lines here. The low-end closes of the market after the shorting of the upward thrust. Reverse absorption. The market then goes back up and forms some type of up thrust. This is the opening of the S&P. Usually we get more volatility. It's a good way to stay away from the markets. And we see a low-end close. This low-end close with this selling indicates that we should probably test the bottom of the range again. If the market would have stayed here, near the highs here, we could have had upward absorption if the market would have high-end closes. But the length of the bar with the volume indicated a retest lower, just like the low-end closes indicated retest lower as well. We're coming down. Opening on the first 15 minutes or so in the S&P volume is pretty high. The stock's open. Then we see a market that breaks down to the support. Now, we don't know at this point if this is going to be a negative day, because we don't know if this is really selling. What we do know is that this is support, and what we do know is this is resistance. So we are going to draw a line across from this line, because that's where selling comes in. Mark that as reference. And we then get to the point to where markets breaking, retests of areas that show support, okay, are areas to look to buy. Well, a market reacted here to the highs. So this is a spring, a penetration of the previous low, and lo and behold, the area is a nice area. In the day room, I drew these charts, our day trading room, these charts that we could have a spring from here. So you don't know what the weakness of the day, so you have to wait for the close of this bar. Had this bar closed weak, you would not have bought this bar, because this retest may have failed. The fact that the market had a short spring, a small spring, was Wyckoff's one of the favorite Wyckoff springs, gave you a good reaction to the upside. this reaction upside, we were then thinking also in terms of trading ranges, would give you an area of resistance. So the spring would buy here. If you can notice here, it's 14, 41, 13, 50, 41. Just right here. It's 41, 13, 50. So we're gonna fulfill 41, 13, 50. That's the closest bar. Settlement of this bar. Okay. The settlement of this bar. And all we're looking for is a move to the top of the range. Back to resistance. Well, mark goes up. We get that in 2 bars. 1, 2. We sell the market. Okay. At this level here, we sell the market at 41, 32, 25. 41, 32, 25. Okay. Market does go above that. Okay. But between 41, 13, 50 and 41, 32, 25, it's approximately 900 points at a minimum, maybe 1,000. Even the S&Ps is worth about $1,000 in profit. Let's take the conservative approach of, say, 900, 800. The money aspect of the $50, $100 is not important relative to the structure of the chart. Now, why wouldn't you hold it to see if there's absorption? Because you have a winning trade. There's no reason in the world to take the risk that the market may come back down and form more spacing. If the market does mark up, then you have an up day, and you could buy the retest of the market. But at this point, at 41, 32, 25, you don't know if you have an up day or not. You just have a trading range. The up day would happen most likely as the market gets longer spacing to the market. We also draw some type of reverse trend line also, but you wouldn't know that until you got out already. That reverse trend line there. Now, those of you that are aggressive could have sold this up thrust, looking for a move back down to here. Just playing the trading range. Most markets stay within trading ranges during the day. You generally don't have trending days in markets. If you do, they'll trend up real quickly with volume and then continue. This one was decreasing volume that occurred. This had decreasing volume that occurred. So you most likely would not have the energy to go to the next level. So weakness here, you have to wait for the close to buy. Had you not had the weakness there, you could have bought the support. But you did have weakness. You have to wait for the close. Very conservative close. Your stop would go under the low here, under the spring low for protection, under the spring low. Your objective is the top of the selling bar here and getting out. So approximately $900 to $1,000, maybe $800, say $800 to $1,000 in profit in a matter of 3 bars. 2 bars, 30 minutes. Now, it'd be nice if all trades were like that. In this case, just following a simple spring, buying the close from a good reaction, and then selling the resistance. A simple, structured trade of Wyckoff, which is perfect. Thank you for listening. I hope you enjoyed the video.